Hi, everyone. My name is Dustin Miles with Momentum Multifamily, and super excited to have Brandon Jenkins here today. Known Brandon for a few years now, and it's super excited to have him on. And I'll turn it over to you, Brandon, and just wanted to if you could introduce yourself, and then we can kind of hop into the interview.
Sure, man. Sure. First of all, thanks for having me on. It's a pleasure to be here. Always a pleasure to speak with you. And just a quick little intro. So, as you mentioned, my name is Brandon Jenkins, and I've been a real estate investor for 10 years now, but focusing exclusively on multifamily for the past 4 or 5 years now, which is interesting because time's kind of just flying. But professionally, got my start as a petroleum engineer. And so I was working on drilling rigs, onshore, offshore. Really enjoyed the work. It's tough work. And if anyone is familiar with the oil and gas industry, then you know that it has its ups and downs. And so I quickly identified that, hey, I need to do something to offset some of this risk, the market risk, and started to invest in real estate to help sort of add a buffer or a dampener to that effect, and fell in love with it. So it kind of started off as something that was almost a necessity in my eyes, but then turned into a passion. But yeah, that's kind of the long and short of my journey here.
Awesome. Yeah, sounds good. I think my our paths are pretty similar.
Hmm.
so,
Yep. Yep.
well, cool. And then where are you located, and where do you invest, and kind of what cities do you invest in?
Sure. Sure. So I am in DC. I was born and raised in DC. Actually, when I started in oil and gas, I lived in Houston, which of course is the hub for oil and gas. But I'm back in DC now, here with my wife and three children. We don't invest directly in DC though, because we're in the multifamily space. My preference, obviously, business friendly, landlord friendly, and a host of other things. And so both on the passive and active side, I really focus on the Sun Belt. There are a couple markets that are kind of at that line that I look at as well. So core markets, DFW, Houston. I love Northwest Arkansas as well, and then also looking at Richmond, Virginia to some extent. The transactional volume is a little bit different there, but looking at that market as well.
Awesome. Well, cool. Yep. Sounds good. And there's a lot of different roles you can play. I mean, these are a lot of the transactions we're involved in. Huge transactions involves just a big team in general. Lots of roles and all that. So kind of what roles as a GP have you played, and then kind of what do you like to do?
Yeah, sure. My focus, I help with the asset management side, but being an engineer, obviously, I love to look at the numbers. I love deal analysis, and I like to share with people that deal analysis is actually sort of throughout the lifetime of the deal, right? So even at any point in the deal, there are discussions around what's the ideal exit look like, what does our risk look like, how does the market impact our current position and our potential position. So I love deal analysis, and so that's kind of at the core of what I do. But naturally, I help raise capital as well. Have a network of investors that I communicate with. So investor relations is there. So I would say those are kind of the main three: it's deal analysis, asset management, investor relations.
Awesome. Yeah, sounds good. Nice to kind of have your hands in a few different cookie
Mhm.
jars, a few different places. So cool. And then I know there's kind of when, at least when I started out in 2012, there weren't very many people doing apartments, and so I think the fact that if you were involved in apartments, you kind of stood out. Then it seems like especially with LinkedIn and Facebook, you just we see a lot more people that are involved in multifamily. I guess compared to the general whole, there's
Yeah.
still not that many of us. But is there anything that you kind of do to set yourself apart, from other people? Obviously there's people have options for there's the stock market, and there's people have options for investing and things like that. So just curious if there's anything that you do to set yourself apart.
Yeah, absolutely. And actually, the point that you made there about in the broader sense, we're still not that large of a group, actually.
Hmm.
Um, But certainly within this community, it is a small one, and so once we're in, it's all we see, more more or less. But I realize though that because in the broader sense, there aren't that many of us. It's very much an education based undertaking.
Mm-hmm.
And so being here in DC, and it really became apparent to me once I moved back to DC, because here the level of awareness is not quite the same as it is down in the Sun Belt, where you have more deal flow from a syndication perspective, from a passive investment perspective. You have more of that taking place there. So you have meetups, you have different events. I found that it was more commonplace. Here, not so much, but there's obviously a lot of it, capital and things like that here. So one of the things that I did was to launch a meetup group. And so we do a meetup. We do an in-person meetup once every second Saturday of every month. And then we do a virtual meetup on the fourth Saturday of every month. So those are two things that I do to help educate people and raise awareness. The other thing is I have a podcast called The Capital Stack. You're certainly correct in that, the space is there's more and more interest in the space, although I would argue that, now with what's going on in the marketplace, some of that is starting to curtail a little bit. But so I identified both a need to fill a gap from an educational perspective for passive investors and to help boost the exposure of operators and other real estate professionals. So I launched a podcast platform. And then the other thing that I do is now help people learn to sort of build their brand so that they can attract capital, because it's something that is becoming increasingly important. Is, well, how can you position yourself to be someone who really speaks to your target investor? So those are the things that I do, right? Meetups, a podcast, helping with coaching, and I think those are kind of the core things that I do at the moment to stand out.
Awesome. Yeah, no, that's great. Yeah, I mean, when people are looking to invest with other people, they invest with people that they know, like, and trust. And so, that education piece really helps to kind of, tie a lot of that together. So that's awesome. Everyone has different criteria that they look for in a deal. And, obviously, if you're looking at a deal, or you're looking, to be an LP in a deal, or at least for me, I'm looking at the sponsors, kind of number one. If, in fact, I'm not even looking at the deal unless I already kind of, have, really that relationship with them. But, is there, what all do you look for in a deal? Is it more, do you look more at the people, more at the location, more at the numbers, kind of all of it? Is there, do you have a criteria that you really like to look for there?
Yeah, that's a great question, and I'm glad that you mentioned though the piece about the sponsors, because it's funny for me, like that's such a given in my mind that I almost forget sometimes to mention it, because it's the first check. Without that, there's nothing else. So I think that's a great point. The first thing I look at is the sponsor. Do I know the sponsor? At this point, it's more about how well do I know them, and if I don't, then it's. My first check is, okay, do I know them and am I familiar with them? But if I don't, then there are certainly ways to find out information that I would need to make a decision. I'm a bit slower to invest with someone that I don't already know, because, I've been in the space for a little while now. But that's number one for sure. Okay. So, but outside of that though, I really focus a lot on risk mitigation. Once we get into the deal, then I care a lot about, sensitivity analyses, and do the numbers have a basis? So if I'm looking at the assumptions, I want to know, did they actually meet with the property manager, or do they have, maybe other properties in the area to where they know what those costs look like? They know that their assumptions have a factual basis. And then I look for protection against the downside. So I love, I'm seeing more and more deals nowadays where there's an evaluation that says, hey, if there's no rent bump, what happens to the property? I love looking at debt service coverage ratio. I know it's kind of an old school thing to look at, but I love to see how well that holds up throughout the life of the deal. It gives me a sense of how healthy it is. So those are the things I look for. Protection against the downside is very, very important, but absolutely the sponsors number one.
Gotcha. Yeah. No, absolutely. Yeah. I think, look at the jockey for sure. So, I guess kind of along those lines and all that, I'm sure you've gotten a lot of interesting questions from LPs, and and we have as well. Are there, what should LPs be asking you when looking at a deal? I've talked to some LPs. Obviously it ranges. Some people, we have some LPs that have been in 50, 60 plus deals, 70 deals. And then we have some that, it's their first time. And so, some people don't even really know what to ask or what to look for. But, just kind of curious if you have any, tips for LPs on what they should be looking for in a deal.
Yeah, that's a great question as well. One thing that I think is two things. One is to look at the debt in the deal. How does the debt look? How does it match against the business plan? So if there's a relatively short term business plan, and if it has long term debt on it, maybe it might not be that ideal. Similarly, if it's a short term business plan and with a short exit, but the debt is punitive, to where if you exit early, then you're facing all these penalties. Then that might not be ideal. I think debt drives deals, and I think we're seeing that a lot more now.
Mhm.
So looking really closely at the debt. The other thing is honestly about the structure. So I think that there are a lot of times where, you'll see a deal and it's presented, and I mean the structure in terms of from the sponsorship compensation.
Hmm.
So there are some deals where they're presented and the full story is not necessarily told. So what happens, at refi, what happens to the split at various points in the deal? Because I think most of the time you're going to see kind of what it is at acquisition, but unless it's a very experienced sponsor, in my opinion, they kind of shouldn't be too lopsided. As you get farther down the deal. So like at years 3, 4, 5, what does the sponsorship structure look like? Like if it's someone who's very experienced and they have a long track record of results, then naturally you might see things even out. It might get to 50-50 at a certain point. But I
Mhm.
think that following the sponsorship structure to make sure that it's kind of a fair shake for all sides, but definitely looking at the deal. I mean the debt. I'm sorry. How
Yeah.
does the debt kind of shake out? Yeah.
Yeah, no, that's a really good point. So, I mean, right now, obviously there's, some interesting, there's challenges with, some of the floating rate debt, or, they didn't buy caps, and then, or maybe they didn't buy long enough caps. And then, on the flip side, I know when I was selling some deals, I had, on the flip side, everybody got 10-year debt, or at least all the people I knew got 10-year debt. And so we went and got 10-year debt. And then, on the backside, it's like, oh, you know, the value went up a lot. Let's sell. And then you start looking at your defeasance or yield
Hmm.
maintenance. And so this is the kind of flip side of bridge loans. And so, we had a deal where we ended up paying. It kept going up because rates were going up, but it was a smaller deal of loans $4 million, and we ended up paying, I think, 750,000
Hmm.
for defeasance or yield maintenance. We still did, it was about 3x, but so anyways, but yeah, that hurt.
Yeah.
So on a percentage of the deal basis, that hurt quite a bit. So
Yeah. Yeah.
anyways, but yeah, to your point about debt structure, can if they're wanting to put 10-year debt, but they're wanting to do, it's a 3-year deal, it's like,
Hmm. Yeah.
maybe look at it. So and well, I guess, I know you've kind of had your hand in a few things regarding multifamily, but what do you like most about multifamily, or just something that kind of gets you jazzed up?
Oh yeah, I love multifamily. It's one of those things where it's one of the few environments that I can think of where it has like this what I call a 3-dimensional win, right? Because in this business, we really do get to make a very positive impact on the tenants and the community. We get to make a positive impact on the investors, and we get to make a positive impact on ourselves and our families. So everyone's families and everyone's sort of general overall well being is benefited from when a good operator comes in and does some work on the property, like what you all do as an example. I mean, you guys get in, you make sure that the property looks good, you immediately take action. So if a tenant's there, they know right off the bat, oh, these guys, there's new management in town and they're taking care of the property. That's the kind of thing that for me is meaningful in this. So you get to make an impact, you get to do well in terms of building wealth. the economies of scale, another thing that I absolutely love. So I started off as a single family investor. I think I mentioned that, but
Hmm.
started off as a single family investor. And what drew me to this space was, the economies of scale in every sense. It just in one transaction, you can get many, many doors. And I just think it's just an incredible business to be in. But for those reasons, the impact you can make on the community, the tenants, on yourself, and on your investors.
Yeah, I like that a lot. Yeah, no, that's so true. It's cool to be able to do events and just do
Hmm.
different fun things for for tenants, and then for the community at large. It's like, oh, that asset needed paint. It needed paint a long time ago, and
Yeah.
now it's now it looks really good. And it went from being the not so pretty kid on the block to the prettiest kid on the block or whatever. So yeah, I like that a lot. Good thought there. I guess kind of going on the flip side of that, there's definitely some things that I frankly don't really care for in multifamily, and so we're kind of going through it right now. It's K1s for me.
Oh
So I'm
yeah.
not a huge fan of the K1s. So I mean
Yeah.
I like receiving them, but it's a lot of work to
Mhm.
work with the CPA and work with our management company and get everything out. And people are like, hey, where are my K1s? So
Yeah.
anyways, but that's for me. So and then probably loan docs. But anyways, yeah, just curious if there's anything part that maybe don't maybe like as much as some of the other
Mhm.
parts. So
That's actually a good point that you made there, and I would sort of echo that. I'd say that one of the things that is challenging, it's equal parts kind of what gets me excited, but also is challenging, and that's when I know I have like a great opportunity, and this is why the education based piece
mm,
really comes into play. But the reality of it is, even if you have a great opportunity and you do an outstanding job of really kind of taking people through the paces, making sure you have enough material to provide additional feedback, everything that's needed to make a decision. Sometimes, and it's just human nature. Sometimes people might not want to partner with you as a passive investor on an opportunity for whatever reason. And so for me, it gets me excited because I love sharing these opportunities, and and I know how much of an impact it can make in people's lives because it's made that in my life. And so and for me to want to share that is something that gets me excited. But then I also realize that if I'm looking to raise a couple million on a deal, then I better get 3 million, 3.5 million in soft commits.
mm, yeah,
Because the way things shake out, it just doesn't pan out that way. And so that also kind of speaks to what your point is. Look, the truth is, it would be better to have, hey, fewer check. I say better, more efficient, maybe, to have fewer checks, and maybe if you got a couple of wells that are repeatedly getting into your deal, but that does sort of erode at the fun part of building multiple relationships and that kind of thing. So it's a balance, but I would say that's the part that for me is tough. Is kind of the uh, kind of pouring your heart into it and really wanting to share things, but then having to grapple with people's some people's hesitations for whatever reason, some valid, some
yeah.
invalid. So it just is what it is. But yeah.
Yeah, yeah, for sure. Yeah, I know. I remember raising capital in the middle of COVID and having, and people had masks on. I still,
Yeah.
I had the not too long ago because we closed on deal in January of 2020, I guess 21, and so it was a Facebook memory that popped up, and it was me. I was in the bank or right outside the bank. I had the mask on because I had
Yeah.
to go wire money. I was like, well, this isn't. Well, I hope it doesn't happen again. So, anyways, but yeah, it was interesting. Just but we heard, to your point, it's like you thought people were, some people were going to be in, and then
Yeah.
they were like, I don't know where this thing's going. And I'm like,
Yeah.
well, I don't either, but
Right.
hopefully we can kind of get back to normal. So thankfully we did.
Yeah.
So well, cool. And then I couldn't actually, I can't remember this about you. I think I know, but are you part of a mentoring program, or have you been in any? I've been in a few of them, but yeah, just
Mhm.
curious, kind of, what that start looked like for you.
Yeah, I so the first one that I formally joined was a Sunrock group, and I'm still in the Sunrock group as a PM student, but I've been in sort of kind of smaller ones here and there, and and we have a platform that's coming up here soon that'll be launched, but yeah, the Sunrock group is one. I mean, I just in general though, I do think it's very very important to be a part of kind of a community ecosystem. Like I can kind of give you and you guys a call and say, hey, look, here's something I'm looking at, or have a question. And you all can literally, depending on the feedback, can save me a whole lot, a lot of money and time and headache. And I think the value in something like that, it can't be, it's just invaluable.
Right.
So I believe it's essential to, at the very least, partner kind of link, get plugged in is what I like to call it. Getting plugged into a community and ecosystem of other investors who are kind of where you want to be, and yeah, it's vital. It's for me, it's the most important thing I've done is to surround myself with other investors.
Yeah, I mean, it's you're average of the 5 people you want to hang around. So,
Yeah, yeah.
yeah. So, I think at Jim Rome. So, anyways, but
Hmm.
well, kind of curious if you have any favorite books or podcast, and then something I don't know. I feel like if there's a book you've read twice, I'm not a huge. I do like to read, but I'm not. I wouldn't say I'm not a 50 book
Yeah.
a year type of guy. So not a voracious reader, but I feel like if there's a book you've read more than once, like 2 or 3 times, then like it's got to be really good, right? So, anyways, yeah, just curious if you have any favorite books or podcasts, and then if so, if there's a book or two that you've read more than once.
Yeah. So well, I have to say mine, right? The capital stack, but
Yeah, yeah.
but yeah, but it's just so there is actually one that I love. It's not real estate investing related directly, but it is indirectly. So it's called Marketing Made Simple,
Mm,
and I find that it is one of the most impactful podcasts to listen to for me because I've always struggled with, or in the past, I struggled with outreach. How to get the message out there, how to really resonate with my network. And Marketing Made Simple, they just in every episode just about they have something that I can use, whether it's how to structure and promote a webinar or how to build a website, to make it very clear what the call to action is. Like all these things that almost every single episode that they put out, I take notes and I implement what it is. So I would say that one is just a valuable resource. I also agree. I'm not the type that reads books just to read books. I read books to take action on them. And so I end up, I have one book, but it's very much like a how-to type of book.
mm,
And it takes me longer because I'm taking notes as I read through it. And so two of them, one, I like Who Not How a lot,
yeah,
because it really taught me to, kind of focus on the objective and then who can help me get there, because a lot of times I'll get in my own way.
yep.
The other one is I love Gary Keller's book. So I love
Mm,
I love The One Thing. I've read that one a couple times. And then Millionaire Real Estate Investor was one of the first ones for me. It doesn't focus on multifamily per se, but it's one of the first ones that broke it down in a very plain way, but it also leads off with several accounts of investors and the impact that it's made on their lives. So I just really enjoy reading that book as well.
Oh,
Uh,
cool. Okay. The Marketing Made Simple? Who does that podcast?
I think
You,
it's Dr. JJ Peterson or something, I think is his name.
oh, okay. Oh,
But
okay.
really, really, really good one. Like it's
Okay.
just one of the ones they did recently was about a webinar. Actually, you just say it was about how to boil it down into something very simple and actionable, how to promote it, and then how to follow up. And so for
Hmm.
what we do, I mean, it's perfect because we're
Yeah.
providing educational content, we're building authority and credibility, and then we're
Hmm.
also following up with potential investors. So it just valuable stuff from now.
Got it. Awesome. Okay, cool. Yeah, I haven't listened to that one. I've listened to quite a few marketing podcasts, but not that one. Cool. Okay. Well, just I guess kind of we're at the beginning of the year, so it's a lot of goal setting and all that occurs around this time or in December. So Kind of curious, where you see yourself in 5 years, and
Mm.
or maybe that's a little far out. So maybe if there's what kind of looking for the next few years. So however you want to answer that, but yeah, just kind of curious what the future looks like for you.
Yeah, sure, sure. So, for me, it's about growth. I think in the past, I kind of focused a lot more on co-GP opportunities, which is still what I enjoy doing. Because I just think that there are groups and teams just like you guys where you really have it dialed in, and so I'll always kind of look for those types of opportunities as well. But really looking to have my firm Birch Prosper to kind of lead more deals to where we have a cadence of about a deal a quarter is what I'm looking for. I've sort of toyed with the thought of being vertically integrated. I don't know that I want to go that route. I think the most I would do is to partner with one of my good friends is looking at acquiring businesses, and one of them is a property management business. And so I might partner with him to kind of help build out our infrastructure. But hiring, hopefully by the end of this year, first hire, and that's kind of the direction that I'm wanting to go, is to grow the business so that we can facilitate a higher deal flow and manage that more effectively.
Cool. That's awesome. Yeah. And then we get asked all the time. It's like, how do I become a GP? What do I do? Anyway, so yeah, kind of curious, what advice you might have for someone looking to be a GP like you.
Yeah, I think that the goal really should be to communicate the value that you can add to a team. The truth is, an experienced operator usually has the pieces that they need for the most part, and so but you have to identify which piece they have, or that they could use some assistance with. For example, if you're in a particular market, your boots on the ground there's interest in with a certain team and investing there, but you're local and you build up relationships with brokers, then that's a value that you can bring to the team, among other things. But it has to be something like that. It has to be something tangible where this is the value that I can add, and I would like to partner with the team for that reason, as opposed to, hey, I want to partner with you so you can kind of teach me how to do this. That's typically what I do. So I really position myself to add. In fact, some of the things that, like I mentioned, the podcast and other things, I did those before I really started to work really hard to be kind of in the co-GP spot, because I wanted to demonstrate that, hey, I'm adding value to not only to the space, but that I could help the people who I wanted to potentially partner with. I could help them get their message out. And so I can introduce them to my network, which would increase their investor database and that sort of thing. So
Gotcha.
adding massive value in that way, I think goes a long way.
Awesome. Yeah, no, I think that's great advice. It's funny. I was listening to, I can't remember the name of the book. It's an audio book. It's Arnold Schwarzenegger, and I think he's going through his life lessons or whatever. And so his kind of first point, he's like, add value,
Yeah.
So, anyways, that was, so it was funny. As soon as you mentioned that, I'm like, oh, Arnold Schwarzenegger, yeah.
Yeah.
So
Yeah.
I'm not gonna
Always
lie,
add
it's an
value.
audiobook. I do like listening to it just because I like that accent. So
Yeah. It's funny.
not gonna lie.
Yeah.
So
Yeah.
well, cool. Yeah, really appreciate your time. How do people contact you? Feel free to give website, email, whatever best way to kind of get a hold of you and reach out to you.
Sure, sure. So my email address is brandon.jenkins@birchprosper. That's BRANDON.Jenkins, JENKINS @birchprosper. That's BIRCHPROSPER.com. That's also the website is birchprosper.com. I'm on LinkedIn, very active there. And if for someone who might be interested in understanding kind of what it means to attract capital, I'll also throw this one in. It's info.capitalmasterypro.com. So it's info.capitalmasterypro.com, and I have some information there for you as well. I think the last thing I'll throw out is that we have a virtual conference coming up here in March, something that to consider. It's called Recon, RAICon 2024. So looking forward to that.
Cool. Awesome. Well, sounds good. great to see you as always,
Mhm.
and thanks for being on and adding value. And we'll talk soon. Thank
All right,
you.
man. Thank you.
All right, see ya. Bye.
All right.